Imagine this. You're sitting in a car dealership in Ohio. You've picked out your dream car. The salesman smiles and says, "Let's run your credit." 5 minutes later, he comes back with bad news. You're denied. Not because you don't have the money, but because your credit score is too low. This happens every single day in America. Your credit score can decide if you drive away in that car, if you move into that new home, or even if you get that job you applied for. And here's the real truth. Most Americans don't actually understand how credit scores work. Some think it's about how much money you make. Some think it's about never using credit at all. Both are wrong. Today, we're going to break down the real truth about credit scores in America. We'll talk about how they're calculated, why they matter, the myths, the dark side, and most importantly, step-by-step ways to improve your score fast. By the end of this video, you'll know more about credit than 90% of Americans, and you'll be able to use this knowledge to save money, protect your future, and unlock opportunities most people never get. So let's dive in. What is a credit score, really? A credit score is just a number, 3 digits, usually between 300 and 850. But those 3 digits hold enormous power. Think of it as your financial reputation. Just like how people know you by your character, banks and lenders know you by your credit score. Now here's the key point. Your credit score is not about how much money you make. It's about how you manage the money you borrow. For example, someone in New York making $200,000 a year could still have a terrible credit score if they're always late paying their bills. Meanwhile, someone in Texas making $40,000 a year could have an 800 score simply because they always pay on time and keep their credit use low. So let me ask you this. What do you think your credit score says about you right now? Does it say responsible and trustworthy, or does it say risky and unreliable? Because in America, lenders don't see your personality. They don't see your hard work. They see your number, and that number decides if they trust you with money. The 5 factors that control your credit score. Now, let's talk about what really controls your score. There are 5 major factors, and once you understand these, you'll know exactly what to focus on. Number 1, payment history, 35% of your score. This is the biggest piece. Do you pay your bills on time, every time? One late payment, even just one, can drop your score by 100 points. That's massive. For example, if you miss a $50 utility bill in Virginia, that late payment could show up on your credit report and stop you from getting a mortgage next year. Number 2, credit utilization, 30% of your score. This is about how much of your available credit you use. Experts say keep it under 30%, but honestly, under 10% is even better. For example, if you have a $1,000 credit card limit from Discover and you spend $900, your score will tank. But if you keep it at $200, your score climbs. Number 3, length of credit history, 15%. The longer your accounts have been open, the better. That's why you should never close your oldest card. If you got a Chase student card in 2005 and it's still active, that's gold for your score. Number 4, credit mix, 10%. This means having different types of credit, a mortgage, a car loan, a credit card, maybe even student loans. Lenders like to see that you can handle different types of debt responsibly. Number 5, new credit, 10%. If you apply for too many new accounts at once, it looks risky. Each hard inquiry can drop your score a few points. So here's the truth. Your credit score is not about being rich. It's about being consistent. The myths most Americans believe. Now, let's bust some of the biggest myths about credit scores. Myth 1, debit cards build credit. Nope. Debit cards are tied to your checking account. They don't report to credit bureaus. Only credit cards and loans do. Myth 2, checking your credit score lowers it. Wrong again. Soft inquiries, like when you check your score on Credit Karma, don't hurt you. Only hard inquiries, like when you apply for a loan, affect your score. Myth 3. You need to carry debt to build credit. Completely false. You can pay your balance in full every month and still build a great score. In fact, that's the best strategy. Myth 4. Closing old cards helps. Actually, closing them usually hurts because you lose your length of credit history. Example, Jane in Florida closed her 10-year-old Bank of America card, thinking it would improve her credit. Instead, her score dropped by 50 points. So let me ask you, how many of these myths did you believe before today? Why credit scores matter in real life. Credit scores aren't just numbers on a screen. They decide your future. Mortgages. If you live in Georgia and have a 620 score, you might pay 7.5% interest on a 30-year loan. With a 760 score, you could get 6%. That difference? About $200,000 saved over 30 years. Car loans. In Ohio, someone with bad credit may pay 18% interest on a used car loan. That's thousands of dollars extra. Jobs. In California, some employers legally check your credit before hiring. Bad credit can cost you a job. Renting an apartment. In Chicago, landlords may reject tenants with low credit altogether. So credit isn't just about money, it's about opportunity. Step-by-step plan to improve. Fast. All right, let's talk action. Here's the step-by-step plan to boost your credit score fast. 1. Check your credit report for free at annualcreditreport.com. Federal law gives you one free report per bureau every year. 2. Set up auto pay. Never miss a due date. Even one late payment sets you back years. 3. Lower utilization. Keep balances under 30%, ideally under 10%, or ask for a higher limit. Example, call Capital One and request your limit go from $1,000 to $3,000. Suddenly, your utilization drops. 4. Don't close old accounts. Keep them open, even if you don't use them often. 5. Become an authorized user. If your parent or spouse has an old, well-managed card, ask to be added. Their history boosts your score instantly. 6. Handle collections smart. Negotiate with collectors to remove the mark once you pay. Always get it in writing. Follow these 6 steps and you could raise your score by 100 points in just 6 months. The dark side and conclusion. But here's the part nobody talks about. The dark side of credit scores. The 3 credit bureaus, Equifax, Experian, and TransUnion, are private companies. They profit from your data. And mistakes are shockingly common. Nearly 1 in 5 Americans has an error on their report. And when something bad is reported, it stays there for years. Collections and late payments stay 7 years. Bankruptcy? 10 years. In 2017, Equifax had a massive data breach that exposed the personal information of 147 million Americans. That's half the country. Yet these companies are still in control. So is the system really fair or just a business? But here's the good news. You now know the truth. You understand the rules of the game. And if you follow the strategies we covered, you can take control of your score, protect yourself, and build opportunities for the future. So here's your call to action. If this video helped you, hit the like button, subscribe for more financial truth, and share this with a friend or family member who needs to hear it. Together we can make America smarter about money, one person at a time.